Hey guys, good evening. It's Simon with ToughTrader.com and Trade and Perform Coaching. Wanted to cover today. It was an interesting day. I had a really good read, and I'm going to go through and look at what the setups were beforehand, so we could have figured out how we could have figured out this up day, or at least how to handle it. But also really interesting. One of the things you got to understand how I trade. I trade in a leveraged way, and my focus is essentially the equivalent of high stakes poker when I'm trading, right? I want to find the best setups and take advantage of them. And I want to avoid everything that's mediocre, right? Just like anyone who's a good at any game, right? My objective is not to be constantly trading, but to constantly identify what my best trading opportunities are, right? So there's a base for doing that. So when I start, the first thing I have to figure out is, what is the market going to look like when it opens? What kind of price action do I expect? And what are the markers or the clues as the game is progressing that I can use to figure out how I'm going to trade? Now, I'll tell everyone up front today, it was a good day and it was a bad day. So number one, I didn't get run over short, which was good. I had that read right out of the gate in the market preview. You can see it's there on the video before this one on the YouTube channel. But what I did not have, or what I needed, was a good location to get long today, and I did not get the long read correct. And even worse, when I did get my trade setups today, I did not pull the trigger. It was just one of those days where I just could not get in front of my own thought process. And even though my read was correct, I could not get far enough in front of that read to make it pay. Okay, step number two that's important about that. A lot of traders, I want to start right off on the coaching part of it, right? A lot of traders, when you're missing your trades and then you're watching them go profitable, a lot of guys that I coach, I know I've had it happen myself, all of a sudden you kind of want to go, hey, I need to get ahead of this curve, or I need to catch another trade to make up for the trade I missed. And this is really important. You don't. Okay, let me tell you right now, you don't. Let me tell you why. Your only focus should be, where do I get to my next best trade? Everything else doesn't matter. So let's jump in. I'm going to keep this short tonight. So number one, let me get over here to my other computer, and let's talk about some basics really quick. And then I'm going to talk about one timing to the downside and to the upside on the 30-minute time frame. And then we're going to say goodnight and get out of here, right? So this is going to be pretty brief, but I think it's pretty important. So if we look at NQ to start with, which is right now is my favorite trading vehicle, okay? One of the things I watch really closely is the ending of the one timing down frame. So let's build this from the beginning and move it back. So quickly, we knew a couple of things coming into today. In order to be short, or in order to have an extension to the downside, right? What do you need? It's a pretty easy list. You got to get below prior day's low. That means we had to trade below 67.28 Now, that doesn't mean there were no short setups intraday, but it certainly meant we weren't going to have any kind of big extension to the downside if you can't get below prior day's low. Number one. Okay. Number two, in order to bust higher, we were going to have to get above 68.10, above the value area high. It left a lot of area, right, to move through. And then where was the chart going to get repaired? So there was a couple of key areas, right? In order to be even thinking remotely that the shorts or the bears were going to be able to make a move to the downside, we had to get below both the TPO point of control and the volume point of control. And you can see today, I'm going to break this down into half-hour time frames. You can see today that we simply were not able to get past that volume point of control. And this is a 30-minute time frame. These bars that you're looking at, this is a combination of TPO point of control, or a time-based profile, versus a volume-based profile, and I use both methods, right? So why is this important? Because what I'm trying to do is set myself up psychologically. I understand, right, that in order to have a big move to the downside when I'm trading, the first thing that has to happen, I must get below here, right? But even within that context, my next warning sign, right, if there were stages of where, hey, like imagine when you get sick, right? First you feel sick. I feel a little cold. My throat's a little sore. I've got a little bit of a runny nose, something along those lines, right? Well, the market can play the same way, right? So the first thing that we knew this morning due to the gap up is that we knew we were opening up inside of prior day's value area, or what I call the neighborhood. This neighborhood, right? We either have to get above it to push higher, or we have to get below it to push lower, right? So the first thing I know is when we open in the middle, the type of price action we're likely to have is choppy, two-sided price action, where there's a non-directional move, Tight stops will get taken out consistently here, and you really have to pinpoint your locations when you're trading in that chop and realize, here's the most important thing that frustrates traders, is that even if you get an extension on a trade entry, it's probably going to come right back up against you or right back down against you. And look at the price action we had out of the gate on NQ today. So look how it opened. So this is the picture right here. We are inside of value. What did the market do? We drove down, right? We couldn't get underneath the value area low. We drove up. We drove back down. We drove back up, right? This is a open auction, right, where we go absolutely nowhere. But if you're not careful on how you place your trades in this area, this can result in a lot of frustration for day traders. So the important part of that is, how do you know when that's likely to occur? If you look to your left and you see you're inside prior day's value area, which on this chart is this blue area right here, then you know right away, hey, we're likely to have open auction up and down, right? And then the other part that we're looking for next is very, very interesting. This is what I was going to talk about. So we couldn't get below the value area low. We couldn't get below the volume point of control, right? And what you'll notice, and I was wrong and I missed this. See this wedge that's forming right through here? I'm going to draw it out so everyone can see it. See how we start forming a wedge right through here? Well, something important happened here from yesterday that I did not incorporate into my trade thesis, even though I had location. I said that 2755 was a very important location, both based on volume, based on yesterday's delta. There was a lot of reasons in the room while I was looking at 6755. But more importantly, yesterday I was pointing out, that NQ would not be long unless we stopped one timing to the downside. And that one timing to the downside means we cannot get above. We don't have to close above. We just cannot get above the prior 30-minute time frame. Well, that ended. So this is an important concept. That ended right here. Normally, what you would see in that situation is from the low is a 50-60 retrace. So I'm going to pull that up right here. This is a 50-60 retrace. If I pull that all the way over here, what you will see is we opened up this morning, right? And all we did was we did a 50-60 retrace back into the most important area from yesterday into the volume point of control, the TPO point of control, and the 50-60 retrace off of yesterday's low. And from yesterday's low, what you'll notice here is that we did not, or we were unable to trade below the prior 30 minutes low. See all that? We were unable. I realized we tested. Actually, I don't even think we tested slightly. We didn't get underneath that 30-minute period. So if you were to merge this day, meaning Wednesday, with Tuesday, what you would see is that we were one timing to the upside already when we started the day, and that was what lets you know that the bigger picture time frame reversal was in play, and that you wanted to be very careful with the short. Now, I figured out that I wanted to be careful with the short. I did not figure out the long side of the trade. I called out in the room 67.55, but I did not take it, right? I didn't call it as a trade. I called it as an area of interest. There's a difference, right? I go 67.55 is interesting, but then if you sit and look at it, a couple things happen. First of all, that 67.55 hit in the first half hour. I generally skip the first half hour. I would have been much better shape if we would have hit this in the second half hour. Either way, I skipped it. Both opportunities I had to get into that 67.55. I skipped both opportunities for a nice long side trade in the room, and it really kneecapped the rest of my day. This is what an ending of one timing looks like, and this is the net result. So this is what I wanted to cover in the coaching session. When you see this one time ending, let me be clear. This can bust, this can fail, but what this does is it gives you a clear entry, exit, stop, setup. So now you can say, look, if I have a $100,000 account or I have a $50,000 account, I can lose X number of dollars from that account. After you figure out how many dollars you can lose, you calculate your entry against your stop. Now you know exactly how many contracts you can trade and what are you looking for in this scenario. So this is big time frame day trading, right? We're working off of half-hour time frames. When you come back and look at this day's profile, right? And I did say this in the market preview. Hold on one second. Let me see if I can fix this. I said in the market preview that the market needed to get repaired right up to here. This was the area that, if you go look at that preview, that was the area that NQ needed to get repaired to. And you can see we traded right up to that. Now, did I know it was going there? I didn't. And had I been sharper or anything under the gun that would have told me, hey, go ahead and take the trade. You have the correct read. I just could not get ahead of my thought process today. But the flip side of that is this. See, when we started pushing up to the upside, and I noted, particularly after this breakout, we started one timing, and I was very clear in the room. You do not want to start pressing a short side trade until after we break this one timing. So this is a really important concept. I'm always interested in what the decisions are that are going to keep anybody from going in, on tilt, right? Basically is what I'm concerned about is, are you going on tilt as a trader? And what are the elements that can keep you out of going on tilt? And so from both on the long side, where people yesterday were getting buried to the downside, right? When you're getting buried to the downside, you look and you go, look, usually, so this is what this market tells you. If you start one timing to the downside, you have plenty of time. You can wait till that one timing ends. And then you have plenty of time to wait for the retrace. Usually I'm looking for a 50-60 retrace to get long, where you have a measured entry, exit, stop, and risk against this process. And then you can push higher. The key to that is, and what I know, I get this from a lot of coaching clients that I coach one-on-one. What will happen is they'll either miss this read or they'll miss this read like I did. And then I used to do this, it was about a decade and a half ago now, right? But I'd get mad. I'd get mad that I missed my read down here. And for some reason, I'd insist that I didn't get the long, I'll catch the short. And I'd start shorting against this, and it would be infuriating. I'd get angry, mad. I'd be on total tilt, and I would just lose trade after trade after trade after trade. It was debilitating, right? Until I learned, right, two things. First of all, capital management is key. Trade decision management is key. So I knew I missed my entries. This was the last place right here. I actually said I thought this was a short right here, and I didn't take this trade either. The 67.91 3/4, I didn't take that either. But what I really miss is on this backside test. So this was the break right here. This is what I really missed today. And so why do I go through what I missed, right? Because obviously I run a room. This backside test was really, really important. Right here, there was a big volume build through here, and this is the backside test. You can't see it. It's on the Delta chart. But this was a very key location. This was also this area through here was the largest downside selling yesterday afternoon. And once we got above it, this effectively backside tested the beginning of the biggest selling. You can see here where we broke, and you can see where the selling accelerated. Remember, these are 30-minute time frames, and we really accelerated out of this location about middle of the day. And once we got above it here, this was the backside test of that acceleration to the downside. And everyone who was short underneath here had to come in and push back up. So realizing that, I was simply able to go, look, I missed my opportunity. That was it, right? I knew that when I missed this trade right here, I knew that I was out of sync. I had missed this long here. I missed this trade here, and I put the day away quietly. So long story short, recognize the things that put you on tilt and then build into your process. Okay, so all of this is a process for me, right? Opening inside prior day's value. I understand we're probably going to have open auction up and down. What does that mean? It means I'm not going to hold on too tightly to forcing a trade one direction or another till we get out of that initial balance, right? Secondly, I understood unless we got underneath value and underneath prior day's low, we weren't going to have a big extension down. So when I'm looking at these pushes lower and I'm like, hey, we can't get past I knew we had to get underneath this volume point of control and the TPO point of control from yesterday, right? I knew when we couldn't get underneath these areas that I needed to respect that and realize that we could push back up. Why is that helpful? Because now I'm not pressing the short to the downside, realizing we haven't penetrated, right? So then that gives me the next option of looking for a long. Well, what happened there? The only option for a long for me was right here, and I really thought I already missed my long opportunity right here in the first hour to get long. I should have observed that and respected it, so I just laid my arms down quietly. But if you've been a trader for any period of time, I know that you've probably had those days where you're like, there's no way we can just mirror image back up, but we ended up exactly doing that, mirror imaging. So now that we've learned that lesson, how do we take that from what we learned and push it into tomorrow? Okay, so let's go talk about that for a second. There we go, and we'll fix this one. Go, let's erase all lines. Okay, so first of all, what's happened? This was an inside day, number one. So what reigns clear still? We still have to trade above Tuesday's high or below Tuesday's low to break out. We have OPEX coming on the way. OPEX usually means that they're squaring the positions, and we tend to get a lot of balance. Now, what's the caveat there? Tend to get a lot of balance, and what have we actually been getting? Two different things. Tending to get balance, and we've been driving pretty much straight up day after day. Yesterday was the exception, and we drove straight down. So as a trader or as someone who runs a room, I'm a little hesitant to say, yeah, we're going to have balance tomorrow. I'll just wait and see what the opening rotation looks like, and I'll make a decision afterwards. But I do know this. If I open inside the value area high, 68.11, all the way down to yesterday's low, 67.50. Now that's 60 points of range. I expect the market to whip back and forth through here because we are inside value, and I expect to get the exact same thing in the first hour if we open up inside there as we did yesterday. Now, alternatively, if we open above 68.11 and we can hold, so let's say you get past the first hour and we've held, we have not traded back in underneath 68.11, I expect eventually the market to work its way up. That is a pretty normal pattern, right? On the other hand, if we open up and we immediately push back to the TPO point of control, so the volume point of control is outside of value, the TPO point of control is inside of value, right? This becomes my first line in the sand, right? If we cannot get past that 67.87, even if we push in, I'm going to look to see if we push out, and I'm still going to look for consolidation above 68.11 to push out at the end of the day. If we trade below 67.87, see how much damage when you look on this profile. See how this profile has damage? It's not very geometric. If you look to the left, see how these profiles become more and more geometric, and they're very specific, and it makes it easier to read where support resistance is. When we get these wide swaths, there's a lot of damage left in the profile. The market tends to want to come back and fix it. So why is this an important area? Because if you look right in here, right here, this profile has to get fixed. If we trade back to 67.87, it will essentially fix the major part of this profile. There's a little piece underneath here. So if we come in and we hold above 67.87, and we consolidate through here and we're able to get back above 68.11, that opens the door once again for a push back to the outside. Conversely, if we open up and we get underneath and we consolidate underneath here, right, that's step one in the possibility of having a rotational day to the downside, right, or a vertical day to the downside, right? That would be step one. So in my mind, I'm not even thinking short until I get to 67.87. I'm thinking, how can I get long positioned? And if I do get short from above, I'm thinking scalp only. I'm not thinking home run short at all. Once I get underneath 67.87, what has to happen? I have to get underneath 67.50. Now, what's the problem with 67.50? From 68.26 down to 67.28, which would be a retest of Tuesday's low, right? It would be a retest of Tuesday's low. It's already a stretch of 100 points from prior day's close, and it's hard to get the market to stretch more than 120. I've seen a few stretches of 130 points on NQ, but not much more than that. So if I do get below 67.28, I'm going to watch for us to trap back in, because on a trap back in, I would expect us to be forced short covering and push back towards that 67.87, right? Conversely, now so that's the long, so there's three scenarios. We open above and we fail to push back into value, right? Push out. We open above, but then we trap back underneath 68.11. I would expect 67.87.50 to get tested. I would expect that generally in this area to hold and then start to build constructively for a push back towards the high and possibly a break of Tuesday's high. Okay, number three scenario, we get underneath 67.87, right? Once we get underneath 67.87, I have to get below 67.50 in order to make any downside move. I seriously doubt that we can make it past 67.28. It's just a huge stretch to the downside, and we have a lot of strength. And so I'm going to start looking for traps back to the upside out of this whole general area down here, right? Now, lastly, one last piece. Let's say bad news comes out overnight and we end up gapping down to the downside. If we trap back above, first back into 67.28, and then we test 67.50, if we do not reject out of the 67.28 to 67.50 back to the downside, right, and we hold underneath today's value, meaning we cannot get back underneath 67.50.75, right? If we reject out of here, then I will look for potential trend day down. However, if we trap back above 67.50, right, and we hold that 67.50, I will look for shorts to squeeze and for us to come back and test through this area and at least back into this area right here, which is roughly 6,800. And I'd be very cautious on shorting gap downs because everyone's been primed to get long these markets. And so really what you're doing is you're looking for a break of the one timing down if we somehow gap down tonight, which is hard for me to imagine what it is that's going to cause us to drive down at this point. So at any rate, that's my 2 cents. I certainly hope that's helpful from a coaching standpoint. I will determine tomorrow. Thank you, Siri. I will determine tomorrow morning based on where we're opening, which way I'm going to attack. As always, I'm burning the first half hour because it lets me see what the rotations look like, and it gets me out of the most dangerous period of the day, and there's plenty of chips to pick up along the way. Remember, my goal is to keep building my capital, building my P&L, and adding contracts slowly but consecutively over time so that I don't have to get bigger and bigger trades. All I have to do is keep taking my highest odds setups and getting paid. So I suggest you do the same. I would encourage you, if you like this video, please hit the like button. Have a risk trading plan. I forgot to mention, so I'll throw it up there right now. When we started, past performance is not indicative of future results. I got to remember to put this in the first. This is for educational purposes only. I'm sharing my trade plan with you in hopes that it'll make you a better trader. My way is not necessarily the only, certainly not the only way, and it's probably not even the best way to make money. It's just a way that works for me consistently, where what I'm able to do is pretty much walk in, day out, take capital out of the market, go home and rest my head. And I know over time I'll make more and more capital, right? We've had a very good start to the year this year. Trading's worked very well, and I anticipate that will continue. And I think this will be a very, very good year. And the last piece is, if you're new to trading, take your time and learn it. There's always going to be a market here to learn. The only question is, do you have your capital to trade it? That's the big thing. And capital management is the most important thing. It trumps capital management skills, trump trading skills. That's all there is to it. So anyways, have a wonderful night, guys. Thank you all for joining. And I will post a link tomorrow morning for the live market preview. I'm expecting a balanced day, but I'm open to any kind of day the market wants to throw at me, and I'll judge that by where we are and see what the Europeans, how they want to take the market up or down, or if we open inside of value tomorrow. So have a great night. Talk to y'all soon.